Hi, this is Praveen Khaitan. Today in technical analysis, we're going to learn chart patterns. Two major patterns, that is head and shoulders and cup and handle. Now, how does this look like? A head and shoulder pattern, which is actually a reversal pattern. That means the price is going up. After this pattern, there will be a reversal in the prices. So what do we see here is a shoulder. Then we see a head, which is actually the higher high of the previous high. And then we see a lower shoulder, which is actually the lower high. Then what we do is we simply join these two bottoms and create a neckline. And where the price actually breaks the neckline, what we do? We can take a short position. Okay, and the difference between the head and the neckline will be your target below the breakout point here somewhere. And your stop loss, a good stop loss, will be above the lower shoulder. However, few people take stops above, just above the breakout. Now, take an example. In this chart pattern, we can see here a shoulder, and here a head, and then a lower shoulder. What we do next? We meet these necks. Okay, create a neckline, and then wait for the breakout. There is a breakout, and we short, taking stop loss above the high of lower shoulder. And we see the price went. Obviously, you will make good money if you actually get these kind of trades. Now, there are inverse head and shoulder patterns also. Sometimes, usually it is hard to find an inverse head and shoulder pattern. However, with a little practice, you can actually find the inverse head and shoulder pattern also. Now, if we see it here, we see a shoulder here, we see a head here, and then I see here a lower shoulder. And then what we do is we draw simply a neckline, and after that we can simply wait for a breakout. If there's a breakout, take a long position and enjoy. In this case, where should be your stop loss? Exactly below the lower shoulder. Now, let's understand another pattern, that is cup and handle pattern, which is actually a continuous pattern. The head and shoulder was a reversal pattern. That means the price is going up. If this formation is there, a head and shoulder formation, there are likely chances the price will go far below. However, in the case of cup and handle pattern, it is a continuous pattern, and the price will continue in the same trend. So if you see this kind of shape here, a shape of a cup, and then we find a handle here also, perfectly fine. What will happen? There's possibility that the price will continue its trend, the uptrend. So where do we enter? We enter at the breakout. Now, if you see this chart carefully, we can see here what? A cup shape, and then also a handle, and see after the breakout how price actually went too high. So if you're able to find these kinds of patterns, you'll get lucky and you make good bucks. So be carefully and do a little practice at home. I'm hopeful you'll be able to find these kind of patterns very easy, because there are thousands of scripts to trade. You can trade into commodities, you can trade into stocks, you can trade into scripts.